Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
All right, everyone. Welcome to the show. It's a pleasure to have you along today. And before we get into it, just want to touch on something I'm pretty excited about, and that is a brand new whiz-bang smartpropertyinvestment.com.au website. There's been a lot of work going on in the background for the last couple of months, looking to redefine and evolve and relaunch smartpropertyinvestment.com.au. Done a lot of work, and you might have actually had a chat with some of our team about getting some insights into how we can redevelop the site so it is as relevant as possible for the current market. And there's a whole bunch of new things there that you'll see. Go and check it out, smartpropertyinvestment.com.au. We've put a big focus on the investment and action section, which is our portfolio. And if you've been tuning into Smart Property Investment for a little while, we have built a portfolio completely in the public eye that was shared with all of our readers and listeners on smartpropertyinvestment.com.au. Big focus. Go and check it out. It's got all our properties in there and how it's tracking and evolving, but all the other really good stuff as well, like suburb searches, a whole bunch of data and information on different markets. Got all calculators on there, all the great content that you would expect, and a whole lot more. So go and have a look. There's some special stuff there as well for Smart Property Investment Show listeners. So go and press on the button. You can go and check it all out. Hope you enjoy. I'll be interested in your feedback. If you want to let us know what you think and anything else that we can do differently, let us know. We're all ears. We just want to make sure it is as useful as possible to you as a property investor. Anyway, so that's just a bit of a plug at the front end of it. Going to get straight into our podcast today. It should be a good chat to have Arjun Paliwal in the studio. He has someone who bit of a theme at the moment, and it's not a bad thing either. We are right behind this thrust of a whole bunch of new generation of buyers agents coming into the market. When you look at the American market, you typically have someone on the buy and the sell side. It's just commonplace. But here in Australia, obviously we have tens of thousands of real estate agents, and I think we've only got hundreds of buyers agents. So there's a whole new generation coming through, attracted to it, but they often have a great pedigree, or by and large have a great pedigree as investors themselves, and that's what really gets them interested in potentially turning that into a career. And Arjun is one of those guys. We're not going to get into what he does as a buyer's agent. We're going to get into his story as a property investor and how he ended up sort of choosing to throw in a towel in his job and look for properties full time. So Arjun, how you going, mate? Welcome.
Good, thank you. Thank you for having me on.
Are you going to go and check out the new website?
Oh, very much so.
Yes,
see
good.
that actually.
Yeah, everyone's going to do it. Everyone's doing it. So yeah, really good. So Arjun, you're a Sydney boy, not born and bred though. Where's home originally for you?
Home is originally Wellington, New Zealand.
Okay.
So I've been over from Wellington, 8 years now?
Yep.
There's a special day called Guy Fawkes Day in New Zealand, November 5th. So that's my yearly anniversary on that time.
Is it? I've been in Wellington before. I worked as a labourer out there digging trenches once way back when, and by memory, it's a Courtney Place. Courtney.
Yes, that's
it. Had more bars per capita than anywhere else in the world. So
that is the famous strip. Yeah, definitely. Restaurants, bars, everything.
So, how old are you?
It's 26.
Okay, so
26.
you're pretty young, right?
Yeah.
How long have you been investing in property for?
Well, I've been thinking of investing since very, very young. I mean, influenced by many others, but started investing at the age of 22.
Okay. And how old are you now?
26. So just turned 26 a few months ago.
Okay. And just to give us some idea of how many properties are in your portfolio?
So I've got 9 properties in the portfolio, and that's 8 residential, 1 commercial, and that's spread across 4 states in Australia.
And you've acquired all them in 2.5 years?
Very quickly, yeah.
So you haven't been messing around?
No, not at all.
Okay. All right. So let's go this way with this chat. Let's run through your properties, and but before we get there, what is your strategy in property investment? What do you do? What's your focus?
Yeah, so my focus started on when I first purchased my first property. I didn't really have a focus. It was just buying a first property because everyone was doing it, and it happened to be in a city where everyone was buying at the time in Sydney. And it really changed when I saw the success stories of others. So when I saw others start to build a portfolio that generated income and wealth, that was really something that appealed to me. And most importantly, it was what you could do with that income. So for some, it was being able to have money for the rainy days, be able to support their portfolio in ups and downs to long-term grow wealth. And for the others, it was to be able to live off it or eventually give back from it. So just seeing those different factors, my strategy then came down to building an income stream while still building wealth.
Okay. So why are you building wealth?
So there's a few reasons. Look, I mean, I started with something called a BHAG. I'm not sure if you're familiar with that term, but big, hairy, audacious goal. Now, I very quickly learned that the people who could look after themselves, look after their families, look after loved ones, and eventually look after some of the larger charitable causes in the world were people who built significant wealth. And I think for that wealth to continue sustaining and grow bigger, I think it's very easy to now look at, if you look at the lending environment, income is very important. So I'm just on this mission of trying to find a balance between the both, because as time has gone on and as my wealth has increased, I've been able to change both my lifestyle, but actually the lifestyle of others around me, the people who are close to me.
What does wealthy mean to you?
Wealthy, I think it means the freedom of choice. So when you, I feel, have attained that wealth, can you look back and be able to use it to do what you want to do at any given time? Now, people's what they want to do continuously changes. So as it could be, a small amount of wealth might mean a lot to you, or it may not mean nothing when you compare. And that's sometimes when it can get dangerous, when you compare too much. But I find just having that wealth to have the freedom of choice is the biggest thing for me, whether it be a trip overseas, a moment of time with family, or being able to look back and go, hey, if we can start something here, this could be really exciting in the shape of a business or a charitable opportunity.
Do you think you're wealthy now?
No.
Okay.
No.
So when will you be wealthy?
I think because of my ongoing retarget setting, I don't think I ever will be in my mind. I think it's something that I'll always have these goals in front of me, because when I first started my first property, wealth to me was getting that first one. Then it didn't look like wealth then. Then it kept changing. So I just feel like as long as I keep this cycle of this passion that I have for investing, this passion that I have for giving back, this passion that I have for looking after myself better as well as my loved ones, I don't think I'll ever look at it and say, I'm wealthy. I think it'll just be an ongoing retarget setting all the time.
So I guess part of wealth creation for you then, it sounds like a little bit of a bit altruistic. So you want to do some good later on in life, or sort of perpetually through the process of creating wealth. So that sounds like it's important to you. Is wealth also like, do you like fancy stuff? Do you want a fancy car, or is that important to you? Which is okay if it is,
Yeah.
right?
Look, I think there is always going to be moments where I feel like if you don't celebrate, it shows that you may not be reflecting. Like, I think there's a lot of people who maybe don't have the Gucci belt or the nice jacket or the nice car. But then for some people, they just perhaps don't have that clear vision of what's ahead, and they need moments of celebration along the way. And to be honest, I'm someone who does enjoy that from time to time, like the extra trip, the nice car, and these sort of things. But I look at it differently. I don't look at it as having a possession, because even when I was 16 or 17, when I got my first Toyota, that was very nice, right? So your definition of nice keeps changing, but I don't think of it as just to have those things. I think of it more so to go, wow, I grew, I achieved something. And I think of it as milestones and celebration, because then that whole thing comes up of, are you working with your head down, not enjoying what you're working for? Or are you being able to look up, look back, reflect, celebrate, and then move on to the next goal? So I think that's a part of my journey.
Where's this philosophy come from?
Look, I've been really surrounded by a lot of, family who've done some things well for themselves. But I have tried to study some of the most successful people in the world, from your Grant Cardones to your Rob Kiyosaki's to, even some people in Australia who I really look up to. So there's just this thought that I try and pick one thing from each of these different people that I like and put it into my own puzzle and what I'm trying to go for. And I've just noticed that those people who are looking back, reflecting more on their journey, being able to celebrate those milestones, are those people that are bringing a bit of that joy into their journey as they go.
So it sounds like you got this pretty mapped out. How do you think you're tracking against these goals? If you're going to hard mark yourself, what are you, 6 out of 10? You're 7 out of 10? You're 10 out of 10? What do you reckon?
So for where I originally set out to be a few years ago, I think I'm on track to say an 8 out of 10.
Okay.
But then when I set my new goals ahead in life, I'm right back to a 4 and 5. And I feel like it's this balancing journey from going to that 4 out of 10 to an 8 out of 10, then going back, because that's what excites me, just ticking off something new as time goes on.
Talk me through your goal setting strategy. How do you do it? When do you do it? Why do you do it? How frequently do you do it? Tell us about it.
Yeah. So firstly, my goal setting comes from seeing the other side. And what I mean by seeing the other side is, being with people who have achieved it, firstly, or looking up to people who have achieved what I aim to achieve. And again, on a high level, that could be, looking after themselves, looking after family, looking after charitable causes. If I think of those three, they're the three most important. So when you see the other side of what someone can do, I think that's where it starts with your goal setting. And then I just take that top level goal, bring it down, and I maybe find 3 to 5 people who aren't on that top person level sort of range, but they're working towards there. Because sometimes I find that if you find the most inspirational person out there and they're miles apart, the things that they say are more so about what they're doing at that level. And I find when you find people that are maybe a few levels below that but closer to you, you start to map out that line in between. So that's what I find helps me for goal setting. Finding at that top and going back down the levels.
So you said you got 9 properties at the moment, and you're young, right? What's your parents think about what you're doing? Do they think that they expected you to do this, or are they impressed? Are they proud? What do they think?
Proud, I think that's come up quite recently, but in initial stages, it was a bit of mixed emotions. So for Dad, he was or is an investor in New Zealand, not so much in Australia. I think there is 2 things that come to his mind. When I look back to his times in New Zealand, he goes, "Well, that's amazing what you're doing. I'm really proud of you." But then when it was his moments in Australia where he had some opportunities but didn't take them, again, he's really happy that I'm taking them, because I think over his 10 years plus in Australia, the one thing that he regrets is not taking action and being able to do the things that I'm trying to just take action on. Then Mum, on the flip side, is if I come, home an hour later or something an hour later, she assumes that it's because of all these properties and all the stress and everything that's happening. So she's suddenly like, "Oh, are you sure you want all of that? Are you sure you want to do this?" And, relax a little bit. So I find I'm getting this yin and yang approach that's making me, one, stay motivated, stay future focused, and then one that's making me go, "Hey, you know what? Enjoy some of the little things a little bit more and just take your time," because being so young, if you throw up, a compound calculator, chuck in a couple % and try and acquire one asset every 2 or 3 years, it still ends up like a pretty sweet result at that, 65, 75 age.
Oh, yeah. So, compounding interest is what Warren Buffett has always said is the most beautiful thing in the world, and it is. You just got to get that right. So it's a long-term game. But from a cultural perspective, and before coming there, you mentioned you have an Indian background.
Yeah.
What's the sort of, if you give me some insights into sort of the expectations culturally around wealth creation, is it an important thing? Going back to what sort of your parents thinking about what you're doing.
Yeah, look, it is very important in the Indian culture. But I think before that wealth creation, there's this mindset commonly found in the Indian culture to tick off certain boxes, and that certain boxes sometimes look like, okay, doctor, lawyer, or IT.
And you've chosen property investment.
Yeah, I went the round way around it. But along the way, I think education and formal education is extremely important in my community. Whether you meet someone on some of the corner stores that Indians are known for opening up, or driving taxis, or other common, I guess, stereotypical jobs or employment, you'll find a lot of them have really in their early years taken formal education seriously, whether it be MBAs, bachelor degrees, or so forth. So I did have a bit of a weird moment when it comes to that cultural expectation. I jumped ships into the working world at 18 and sort of put the education behind me. But then I came back to it, and just recently last year, I finished my MBA.
Okay.
So I think it was not because of the cultural shift, but I think that plays a part in your mind as soon as see your parents talking about it, family. I think I used it more so just for personal development, and it just ticked off some of these cultural boxes along the way.
I find it really intriguing, and maybe there's a book in it at some point, I don't know, but the cultural nuances around property investment, because I'm very fortunate on a couple of reasons. We live here in Sydney. It's a very culturally diverse community, and our listeners are from all over the world, right? They tune in. So I always find it quite interesting the different attitudes towards wealth creation depending on whether it's your cultural background, and it is very, very different, but fundamentally it's the same thing. It's about doing the right thing all the time and making sure that you're covering all your bases. And, it's all about wealth creation and how that wealth creation can support. And, different cultures have different ways they like to spend their wealth or how they prioritize their wealth. And I just find it really, really interesting. Here's a reason for the question. It's a good one. So you did an MBA.
Yeah.
Okay, so you must have been working, right? So to buy 9 properties, you must have had a job, because otherwise banks wouldn't give you any money. So tell us about that.
Yeah, so you've hit the nail on the head, and I think in the conditions as well today where finance is getting tighter, I had a moment, I think it was when I was around 19 or 20. I didn't know property investing at that time. I didn't know it was property, but I very much knew that income growth was something so critical that sometimes we often forget about. We get onto the fact of, okay, I there's seminars here or there's books here about teaching you how to, get away from it all and build these property portfolios to suddenly retire. But I think we got to bust that myth that income is super important as you do this. And look, whether you're in something fulfilling or not doing something fulfilling, you got to look back and understand that has to happen.
We're talking cash flow, right?
Cash flow from your salary, your self-employment, whatever it may be. These are two important parts. So at 19, I didn't realize it was the investment side of it, but I just knew I wanted to build that part of my sort of journey. So I was working at the bank. I was working at CBA at 18 as a teller. And the funny story about the jobs were I actually tried to apply for everything I could from November 2010 till January 2011. No luck. Absolutely no luck. From retail stores in shopping malls or even, clothing stores or even sweeping floor at the barbers. I was trying to do everything. Didn't happen. All of a sudden at 18, I got the green light and opportunity as a teller in Parramatta and CBA. But once I learned about the banking world, I found that A, there were many, many successful customers. And B, when I hit that 19, 20, I started realizing about the power of income and what it can do for you. I rapidly started to focus on, self-development. So there were, mentors, coaching, personal development courses. And from 19, very rapidly, I became one of the younger branch managers at CBA at 21.
You're a branch manager at CBA.
Yeah, 21, I was a branch manager. And then
which bank?
Surrey Hills.
Surrey
was
Hills.
My first one.
Okay, it's a big sort of, it's not like a small little regional location. It's a big bank branch there.
Yeah, so from Surrey Hills, then I had a promotion to Newtown, and then from a promotion there to something they call Tier 1 sites, which are ideally your largest 100 of the 1,000 branches in, say, CBA, and that was at Marrickville.
Okay.
So very quickly, this rapid career progression helped
So
my
a bit of a rising
growth.
star within CBA
It went
retail
well.
bank. Yeah, okay.
It went well. So that helped a lot, as you can notice. I mean, from six figures at 21 to the double six-figure marks at 23. So I'm not going to shy away that income wasn't the normal, but I feel like instead of saying we want to achieve a portfolio with the normal, we got to look at these, focuses on ourselves and that personal development.
So you're making a shitload of money.
Back then, yeah.
Yeah. Okay. That's cool. Why do you think you're so successful in your job as a branch manager? Why the rapid promotion?
Well, there was two key parts: looking after customers and looking after your team. Simply put, everything else is just admin and stuff that every person can learn. But the two differentiators is looking after customers and looking after teams. As soon as I felt like when you just increase the level of value that you could give. Richard Branson very much says, if you want to look after your customers, look after your team because they'll look after your customers, right? Building a culture was my number one focus of success. And that was trying to find that the 80-20 rule, so that 20% of your people in your team that produce 80% of the results. And then obviously also from the customer perspective was just really, really putting forth value. I think whether it's financial or feel good or anything, if you're throwing value out there, it comes back in one way or the other. It might be a feel-good moment or it might be a financial reward. In some cases, it was a mix of both, and that's when the career really took off.
So working in a bank branch, you see the whole plethora of customers, whether it's deposit taking, whether it's mortgages, whether it's credit cards, whether it's whatever, right? Which bit did you like the most?
I found there was two parts. One is the people who are building significant wealth through real estate, because that was a huge, so the mortgages, and obviously that turned into the deposits, whether it be saving for it or selling off and creating some huge wealth in their bank accounts.
So you used to see people come in and you go, wow, they got a lot of money, or you'd see that. So you see, were you doing mortgages?
So my branch staff were doing mortgages, but I was managing a whole bunch of different lenders and relationship managers. So I was part of that process throughout it all.
Okay, so you used to see people's portfolios and how they're creating wealth. So that really was an inside view for you to how you can go about creating significant wealth through property.
Massive. I think that's one of probably the most important part of my journey. Seeing the goods, seeing the bads, and being able to know some of the things you really shouldn't do, and then some of the things that if you do can make some significant results.
So everyone working in a bank branch gets that same experience by and large, depending on what you do. But what made you different to most people? Because a lot of people will just sit in the bank branch all their life and see this and never do anything about it. So what is it with you that made you go, hang on a second, I can try and emulate them?
It was the light bulb moment where I took a step back and I said, hold on a minute. Every single day, I'm seeing some super successful people walk through the door that you'll never see them on the news. You'll never see them on the TV. They're not out there, but they're doing stuff. And the difference is most people maybe spend 20 to 30 minutes supporting the deal for that customer. That's a natural part of my job. So if I want to do that, I'm just going to have to do that anyway to still work there. I used to take that extra 30 minutes to find out more about the person in front of me. So the similar way that, I watch podcasts and Smart Property Show and so forth to get that level of inspiration, I pretty much had a podcast going in my branch 10 times a day, 5 days a week, just listening to people's stories. So that rapidly turned me around because most people were focused on, hey, I helped a customer, deal done, happy customer, happy bank, happy staff, everything. I said, look, that's just going to be a natural occurrence of me giving value. So why should I really celebrate that as much as others? Let me focus on the stories because I've got insight that not many people have an opportunity to take.
So having dealt with a whole bunch of different successful people in your role as a branch manager, what does success look like? What made these people successful? What are the three key tenets of a successful property investor from your view of looking inside?
So looking inside, I found in the property sense and a mindset sense, there were two parts.
Okay.
So from the mindset, I found that every single common theme was around not comparing yourself to others. There are people who take different paths and the turtle and the rabbit, right? That's just so many things. People can go fast, people can go slow. You shouldn't compare the race because you are always running your own. So that was one of the mindset things. Number two was setting big goals. If you set small goals, you're probably going to achieve BHAGs, big, hairy, audacious goals.
Yeah.
So they were always setting big goals. That was another part of the mindset. And then the third part in terms of the property, I just noticed a very similar theme where there was overseas, in Australia, customers, not customers, people who had a balance of size and income in their portfolio were achieving massive results. Now, I know there's ways to get to that sizable portfolio, but let's just assume you're getting there. When you achieve size, you're relying on less growth to propel your portfolio forward. So you're not relying on these unicorn properties to double in value. And then B is if you sustained enough income in this portfolio through tighter lending times to increase interest rates to lower, you're able to hold. And naturally, if you saw a recent RP data report about the holdings and the losses of
pain and gain report.
Exactly, right. Similar theme was people who are holding longer were on the right side of the gain, and people who are selling within that 5 year, 3 year, 4 year were on the pain.
If you're trading property regularly, it's you can actually get it right, but often most of the time you don't. The pain and gain report that CoreLogic does shows that over time, typically the people who get the gains are the people that hold on the properties longer, but that's the benefit of time. That's really interesting. So you've now left the Commonwealth Bank and you're setting up a buyer's agency business, but did you get your first loan through the Commonwealth Bank?
Funnily enough, I got almost all my properties from the Commonwealth Bank.
Okay.
I think.
Do they cross-collateralise them or they're all individual? No? Okay.
All individual. Everything.
Right,
everything's kept separate.
You get a nice discount?
Funnily enough, interest rates were pretty much the same as customers. The only benefit we had was no LMI on some of our first few deals. But then as time went on, I didn't really have to use LMI because I had enough equity building. My savings habits were absolutely rigorous. And so,
So were you living with your parents? You still do, right? Or
so basically.
Do they live with you or you live with them?
It's a bit of both, right? One is I'm always their child. I'm always their kid. So I'm living with them.
Yeah.
But at the same time, they're technically our tenants in this property.
Oh, okay.
So we've got a mixed setup where we're living in a room and also tenanting out some of the rooms to them.
There you go. That's cool. So tell us about your first property. What was it?
The first property was the home in Sydney.
Okay. The one that you live in now?
Yeah.
Okay.
Yeah. So that's the mixed PPOR, principal price of
And you bought that as a first home
time
buyer?
Yeah.
Okay.
Yeah.
Yeah.
So that was purchased for $970, I believe, in its earlier 2015.
Whereabouts is it?
Glenwood.
Okay.
Yeah. So just off the turn off on Sunny Hot Road near there. So
near the M7 Sunny Hot Road?
Yes, that's correct.
All right. For people that know Sydney, there you go. Which is a great spot, by the way. And it's probably only about 1.5 kilometres to a new train line now, I imagine, up there on Rouse Hill. So,
Norwest and Rouse Hill, both new.
Around there somewhere. So, good spot. Okay, cool. So that was the first property. How much deposit did you put down for it?
So 10%.
Okay.
And that 10% was myself, my wife, my parents all coming together on this first one.
Okay.
And so then, we've been able to get into that first one there.
So you clubbed it all together, 10% you need to pay LMI because of the benefits of working.
So around 25 to 30,000 in savings.
Okay.
But even then it would have been savings just on the loan, not on the actual cash. So cash would have still been the same.
Okay, so that's your principal place of residence. So let's put that aside. So let's talk about the actual investment properties subsequent to that. So what was the next property after that?
So the next property was in Brisbane.
Okay.
And the western corridors of Brisbane, a townhouse, 2-bedroom townhouse. And That was the second, and then the third and fourth sort of in Brisbane as well.
Same areas. Which suburbs?
So there's a place called Collingwood Park around the western corridors of Brisbane. So that was a cheap pickup.
Yeah. What did you pay for? Like 100 and something grand?
Quite cheap, yeah. So 100 and I think 80 something of that time. But one thing I noticed about that is actually that property was one of the mistakes that I'd made in my portfolio. So I think it's important to note that you can make mistakes as you build a portfolio.
So your second property was a mistake?
That's right.
Why was it a mistake?
Well, I noticed something very quickly as time goes on from the customers and my own journey. When you buy a townhouse in, say, a gated community where there's a lot of like for likes going on, you're one piece of the cake rather than owning your own cake. And because of that, you can enjoy the goods and the bads pretty quickly. So on that time, I had, people selling on the low sides because of perhaps their own personal circumstances, and then sometimes people selling on the high. And as you know, valuers are going to be more risk conservative in changing environments. They are looking at the lower side. So sometimes I had moments where values were, 210, 200, and sometimes I have moments where the value of that has come down to 185, 190.
Well, it fluctuates so much, and every property is pretty much the same. They might have maybe different carpet, but they are the same property in the same complex.
Like for like.
So it's really easy to get a comparable. Okay, so the third property, where was it?
That's also in the western corridors of Brisbane.
Suburb?
So Balbird Park.
Okay.
And that actually had some good growth. Did a couple of touch-ups on there as well. And so that one was purchased for $292, and it's in the early to mid 300s now, so it's picked up a little bit.
All right, cool. Where was the fourth property? So
that is in Brassel. So
whereabouts?
Brassel. So again in Brisbane.
Yep.
And a new build, dual occupancy, picked up in the sub low fours, and that has shot up quite quickly as well.
Did you buy that off the plan?
So yeah, that was off the plan.
Development, house and land development.
Yeah. Okay. So that was a dual occupancy with the 3 on one side and the 1 on the other. So very high rental income and depreciation.
Okay. Are you happy with that purchase?
Very happy.
Do you reckon, what about the resale on it? Would you get your money back if you sold it today?
Most definitely.
Okay.
Most definitely.
There's a lot of that stuff going on up in Queensland, and over time it should be okay, but I know a lot of people they're not getting values on them. And there's so many of these dual key stuff going through right now, and there's some complications around it, but it sounds like it's going all right for you.
I think what's important to note on that one is that I didn't purchase it off traditional channels. So most people have a marketer or a sales marketer put it on, and when they usually sell that, there's their commission built on top.
Yeah.
So it's not always
they get
about
paid there.
Exactly, right. So we're looking at 30 to 40,000 sometimes can be on top of that deal for when they sell it. Now, because I purchased it, via a buyer agent who'd helped me, get this property, I'd actually had it at that development cost and paid the buyer's agent fee separately. So in most cases, the buyer's agent fee was actually much less than what the marketers would earn. So I've been positive on that purchase since the beginning.
So you spoke about the benefits of that is big depreciation. So let's have a quick chat about that. So on obviously the budget 2 years ago, they changed the depreciation laws around existing property, but it still exists on new property. So you can depreciate everything, right? Plant and equipment.
Yeah.
You don't get that on old stuff.
So we're looking close to $20,000 in depreciation claim on that particular property.
On the first year?
On the first year, yes. Yep. And then as it goes on, there's not huge dips considering it's so new. And so that was quite a strong kickback in terms of the tax position for that purchase.
Okay. All right. So this is all these different factors moving together to show a balanced portfolio. The fifth property?
So the 5th, 6th, 7th, 8th all happened at once.
Okay.
It was a unit block in Tasmania.
Okay.
So I purchased a unit block of 4, and that one was actually, I would say, my best deal to date.
So what did you pay?
I paid $365,000 for that unit block.
Whereabouts is it?
In Burnie.
Okay.
And when I individually valued each of them, because they were strata titled individually, each value came upwards of $115 to $135 each.
Okay.
So then basically when I did that, you're looking at a huge intake in terms of growth in the upwards of 500K margin. So that property was valued now over 500K.
What are you renting them at?
So total rents are roughly $690 per week or $695 per week. So, and very low vacancy rates, which has come out to be a very, very solid investment.
So it's good yield on that. And over time, you just think $365,000 for a block of units is, when you look at the thing about Sydney, you can't even...
Exactly.
That's cool. What is it, like a old red brick type thing?
Yeah, so old red brick. So what's really exciting is that I did some comparable reviews of properties that were done up and around the area, and you've got some 1 to 2 bedrooms selling in that, 150 to 250. So some touch-ups, some cosmetics, pouring, reconcreting the driveway and repaints and things. Not too heavy on costs, but that could actually end up in another value jump off the back of these individual values too.
So what are you going to do with it over time? Just leave it, or you might spruce it up at some point?
Yeah, definitely spruce it up at some point. So for now, I think the income, the vacancy rate so strong and so tight, I'll probably leave it there.
Yeah.
But as the tendencies sort of start to say, look, I might move out elsewhere, which actually most of them have been staying put, I might look into one unit at a time internally and then eventually the whole external block.
But Burnie's not a tiny place either. Burnie's on the coast of, is it up north? Is it?
Yeah, so North Coast, lots of infrastructure starting to pick up there. It's that hub spot for when the ships, drop off on the cruise lines and it's becoming quite popular, and it's a rising market at the moment in terms of values.
How did you find it?
That one was actually an online traditional search.
Okay.
So, off-market online, not either channel is necessarily better, but it's just a fact of having that research and looking at that from that perspective.
Okay. So what's next then?
The next is the commercial property in Melbourne. So that was my first dive into commercial. Now, the good thing about that was very, very low LVRs, so 60 to 70%, and I'd purchased an office space in Melbourne. So office spaces traditionally are a bit of a funny investment right now, and they're moving to this, I guess, economic shift where we're finding people are flexibly working more often. Companies are getting smaller in terms of their land space required in the offices. So it almost speaks that economic trends would say otherwise to purchase this, right? But the difference for me was the tenant. The tenant has been there for 10 years. They're a pioneer or one of the earlier adopters to co-working, and the co-working space is rapidly picking up. So I find that sort of office was against the usual trend of office investments, and it's on a long 2x2x2 lease, and that was a net yield of over 8%. So a very strong buy.
Are you going to keep buying? Is that the idea?
Yeah, look, definitely. I think coming back to that mantra that I found the customers having success with around having a larger portfolio means you don't rely on having to have a huge amount of growth. So a 4 mil portfolio growing 10% hits that 400. Whereas if you get one or two negative gear properties totaling 1.5 million, you're looking at needing 27% to get the same gain. And you're losing money while you're doing it, right? So I think having that continuous growth is going to be important. And if I have to rely on less growth each time, it's because my portfolio is bigger.
So you're not working at the Commonwealth Bank anymore, are you?
No.
You've set up a buyer's agency business. How long has that been going?
So I've actually been open. This is the eighth week now.
Okay.
So quite new, but we've had a fantastic start in terms of looking after many customers.
Are you running it out of your principal place residence? You're going to get an office? What are you going to do?
Yeah, so I've got a co-working space at the moment, but because I'm finding my investments is the only focus of my business, 70% of my customers are dealing with me either over phone or via video conference, because it's much less of an emotional decision when you're looking into an investment property rather than your home.
So you just one day said, that's it? Did you tender your resignation, or did you build up for a little bit of time to do it?
It was a bit of a build-up, but also kind of sudden the same way. So I left March 1st. That was officially my last day at CBA. December was when the things were going through my mind. I was obviously buying each property, but I was never looking at my portfolio as a whole. And I started to look at it around then and said, hey, these income figures aren't too bad. And so it was that point where my wife, the biggest impact on this, where she goes, you got to do it. You got to do it. You got to get out. You got to make something happen.
Yeah.
And without her push, I'm honestly saying it wouldn't have happened. But looking back at it, I thought to myself, what's my worst case? I was having a very well-paid job. I'd invested in myself personally to develop good relationships professionally and a tertiary education. And if I throw in one more sweet spot where I give an 8 weeks notice rather than 4, maybe I might leave on some better terms than the usual. Because I wasn't going to a competitor.
Yeah.
I actually didn't even know what business I was going to run.
Yeah.
And so January came around, handed in my 8 weeks notice, and the time started ticking off till then, and it started getting pretty real.
Was the bank pissed off when you left?
There's face value and the back value, so it might be all good. But look, genuinely, my bosses were really happy for me. So
it sounds like they'd probably take you back if everything went wrong. But do they pay for your MBA, the bank? Would you do that yourself?
They paid for portions of it.
Okay.
So that was good. I think there was a leading up qualifications to get to the MBA, because I actually didn't do my bachelor's, right? I got into my MBA through a unique way where they take into work experience and some other qualifications.
Yeah.
They helped me out with that.
Okay. Cool. So you probably can't borrow money for a little while now. Now you're running your own business. It's going to take a little while to...
Actually...
Or you think you can?
Funny story, right?
Yeah.
Look, as I delve in the commercial space, it's a very grey area for lending. And I think good grey, when you think of, is the income high enough to supplement the loan.
Yeah.
Lease stock, not sure if you're familiar with that one, but that's a very familiar loan where if you have a 30% deposit, if you have a high income on the lease, stable lease, preferable tenant case by case, banks will approve you up to 70% without any other financials. So it might sound like, oh my God, but that's so, risky. I think there are so many factors in the commercial investment you want to look at, from the income, the investment. They approve you on short loan terms. So I'm still going to find ways where possible. But in terms of the residential market, I'll be stopping at least for a year or two until I can get my tax returns, my documents, and my income from the business.
Yeah. Are you finding, is it hard to find customers, or are there plenty out there?
Look, there are plenty out there. I think you spoke about the difference in the residential versus buyer's agency and the difference in Australia versus USA. But I think the biggest part is when you first start a business, it's usually your inner circle of friends and family that trust you, want to back you, support you. And I'm finding that at the moment. So I've been lucky enough to look after close to 10 customers in my first 8 weeks. Okay. So it's building up very nicely, but at the same time,
are they happy customers? It sounds like, with the pedigree of the bank, you're going to learn the systems and processes to do good customer service. Which is what it's all about, right? So.
Oh, definitely. I think, and also if you're looking at a business where the person who's paying you is your customer, because it's not like I'm earning from a builder or a developer or some sort of kickback. Customer service expectations are on another level. So I think having that experience has helped a lot. Now it's just a matter of putting into practice and finding some very happy customers to begin with.
60 Minutes the other week said that property is going to drop by 40%. What do you reckon?
I think it's a bit far-fetched, and if it is, am I diversifying? Yeah, I'm across 4 states. When you look at the upper quartile and medium quartile and the lower quartile change in values, it's that premium market that's pushing property prices down nationally across that Sydney and Melbourne space. And at the same time, our banks now more so are much more tighter on some of their servicing calculations than some others are internationally. 7.25 to 7.5% assessment rates, 20% buffers on all your loans, shading your rental income. I know these measures have come in over time and it's taken time to get to this point, but everyone's intentions are to build a more robust and safer economy. And I think that, over time, yes, things will come off the effect of previous situations and previous dealings, but it's just a matter of seeing how that goes rather than speculating the drop.
Cool. Arjun, I've enjoyed the chat, mate.
Likewise.
Good luck with it all. Hope it goes well.
Thank you.
You're still a young bloke, so my hats off to you for giving it a go. But you've left the trappings of a nice, safe environment. You could have worked at Commonwealth Bank forever. Commonwealth Bank's a good bank. And I'm sure you probably would have done quite well, but you've chosen a path of self-employment. So that's going to come with its own challenges, but also its own upside. So I reckon you'll do all right.
Oh, so thank you.
Let us know how you get on. Keep in touch, mate.
For sure, and I'll check out the new website as well.
Yeah, go and have a look at it. That's thanks for that. smartpropertyinvestment.com.au. Go on, it's all whiz bang. It's fancy these days. So we're fancier than what it was beforehand. So but we'll get Arjun back on. If you've got any questions for Arjun, I'm happy to pass them on to him. Just contact editor at smartpropertyinvestment.com.au. Or if you have any other questions about what he's up to and his journey through property, which is an interesting one. He's done it pretty quickly. 9 properties in 2.5 years, but he cheated a bit though. 4 of them were in one purchase, but that's smart though, right? So I'll pass it on, and remember to check out smartpropertyinvestment.com.au. If you're not subscribing yet to our morning newsletter, so you're the first to know what's going on in property right across Australia, and you're better informed, smartpropertyinvestment.com.au/subscribe. We're right across social media as well. Just search Smart Property HQ and you can track us down then. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.